Welcome to the RJLT Economics. Today, let's continue our discussion on the troubling monetary and banking situation in the United States and the US-led financial system. Over the past week, a lot of information and commentary have come out, and some of them have inspired me to further discover a few points that are noteworthy. Today I want to touch on three of them. So the first one is about the moral hazard in the bailout. And this primarily applies to what has happened in the United States. We know that the banks that have failed happen to be the banks frequented by people who are rich and important. I had a conspiracy theory. This is just a conspiracy theory, absolutely unfounded, but the conspiracy goes like this, that there is indeed limited amount of credibility that the Federal Reserve and the American government still retain. So they cannot bail out every bank. But they want to make sure that they themselves and their friends get bailed out. And since losses due to problems with the U.S. Treasury bills and with the mortgage-backed securities are basically universal across the Western banking system, not just in the United States, but it is really bad in the United States because those banks are instructed to hold large amounts of treasury. Now, so basically these banks that are frequented by people basically who are in they basically fail first so that they get bailed out. But later on, when it is mamas and papas shops, these brick and mortar small shops, small business owners, when their banks fail, there's going to be some tough measures. There's not going to be a bailout because right? So I think that was a conspiracy theory. At the same time, whether it's a conspiracy theory or not, there is a very interesting point about moral hazard, which is that on the one hand, the fact that if you don't distinguish the banks that have failed, the SVB, the Signature Bank, from banks that are frequented by farmers, small business owners, etc., then you will reach you will notice a moral hazard, which is that people do not need to be afraid that any bank, however poorly they are run, they are gonna get bailed out. And if that is indeed the case, if people are indeed assured or convinced of it, then actually this moral hazard can temporarily save the American banks, large and small. It is only in the future that this moral hazard applies. And it is only in the future where banks are going to make even worse investment decisions, and they are more likely to be needing bailouts. But currently it appears that the American workers, the American small business owners are not assured. They are not convinced because they are perhaps more cynical than I am, and they are perhaps, at least a lot of them, are thinking that the SVB and the Signature Banks, those are frequented by a different clientele than they, and those are not ordinary banks. So, and indeed, Janet Yellen has promised that they are not going to bail out every bank. So a lot of Americans are withdrawing monies from smaller banks and putting them in banks that are indeed too big to fail. And so it appears that the moral hazard discussion is not necessarily applying for the short term. It really depends on what the U.S. government will actually do. But in the meantime, I think we can look forward to more collapses. It's almost certain at this point, in my view, that there will be more smaller to medium-sized banks that will collapse for the very same reasons. Indeed, not necessarily the same reason, because there's one compounded reason, which is that people are not convinced that these smaller banks could get bailed out, because Janet Yellen and all the people who are talking about it have repeatedly repudiated the moral hazard issue. So people should perhaps be more careful, and I think a lot of people are being careful. And this means that there are secondary bank runs on these smaller banks. So that's the first thing. That's first point, which is that perhaps the moral hazard argument doesn't stand for now, and that a lot smaller banks will probably fail in the US. And the second point I want to touch on is the asset market, the stock market. We know that in the last few years, some people say even the last 15 years, but certainly the last 5 years, companies who are not properly run get rewarded, and investors also on the stock market, and investors also like to invest against basically the economic trend, essentially. What I mean is that when the economy gets worse, they take on risky bets because they think that the monetary policy will be loosened, that there will be a lot more. There will be a lot of hot money that will rush into the stock market, so the price will go up. So that's basically the logic. It's very simple. But when the economic numbers are good, they are afraid that perhaps the Federal Reserve will tighten its monetary policy, and that would mean less hot money that goes into the stock market, etc., etc. That's the logic. Now, this logic obviously is a little bit nonsensical, even though perhaps in the beginning it's nonsensical, but expecting that others are thinking in this fashion and understanding that people are not so rational and people are not so forward-looking, then I guess it is to the second degree rational to invest in this fashion. Nonetheless, I heard that there are some people who say that perhaps it is finally time that people will invest in real assets, like perhaps real money like gold, silver, etc. I'm not so convinced that these bank collapses would trigger people to purchase large quantities of gold. Now, obviously, there will be a lot of people who will allocate more of their portfolio to gold because of its stability. But always when people invest, they don't think, not always, but almost always, they don't think about preserving wealth. They think about how to make more money out of their current money, right? So, so investing in gold in itself does not necessarily generate a lot of returns, and at the same time, the gold market is also not big enough to absorb all the money, all the hot money that needs to find places. So I'm reasonably certain that there will be more irrational rallies in the stock market in the US. But at the same time, I think there will be higher inflation across the board, which will absorb a lot of the hot money into assets that just in the last few months, when the inflation rates were subsiding, we're experiencing some cooling. Right, so that's basically my view. And personally, I'm not against people buying tulips, but they should be careful, knowing that what they are buying doesn't necessarily have value that correspond with what they are paying. They are paying, hoping that someone else will pay more to buy from them. And as long as you have this clear understanding of your actions, it could make sense. But if you think that you are buying something because it's going to increase in value, then you need to look at the fundamentals. And the fundamentals in the stock market, in particular in the United States, is very bubbly. It's very foamy, and that is not conducive to a conservative investment strategy. Finally, the third point I want to make is about the US dollar. I think that, I don't have to think, because in the last week, the Federal Reserve have wiped out over half of its tightening, the results of its tightening, and we can expect, as more banks fail and as the US government acts to try to prevent more bank failures, we can be assured that there will be a lot more asset purchases by the Federal Reserve. And we can be assured that they will, in the future, also never be able to unload those assets. So the balance sheet of the Federal Reserve will continue to grow. And that means in the long term, inflation in the United States can only rise. They have demonstrated that they are incapable of restraining the beast that they have unleashed. At the same time, I do believe weakly that they are going to continue to raise the interest rate. And this is purely because they want to provide some confidence in the US dollars. And also the government in the US want to control inflation because an election is coming. And so I think they will continue to raise the interest rate. And this means that and it will have some effects on inflation. So in the short term, perhaps inflation will be controlled. But this, again, comes at a cost. And this is because at a rather comparatively high interest rate, compared to the rest of the world, a lot of money will flood to the United States, right? That's natural. But at the same time, the US is experiencing already high inflation. With more hard money coming into the US, this money will buy assets in the US, and some of that will make production more costly. Others will directly impact the cost of inputs, and so some of them actually directly the output. So inflation will be actually exacerbated. The problem with inflation will be exacerbated, and at the same time, the United States, the US dollar will have a credibility problem because it appears that the Federal Reserve is raising the interest rate, but at the same time is unable to, after months, perhaps actually over a year of commitment is unable to do what they have promised that would be very easy to do. And indeed, that was a false promise, because it is very difficult to put the genie back in the box once you basically let inflation run wild, right? So I guess that's all the 3 points that I want to make. One side point, because in the last probably 2 or 3 podcasts I mentioned about GPT-3 being used to generate a lot of content. Well, it appears that GPT-4 is now available, and we can expect even more content. I think at this point, perhaps, I'm not entirely certain that it's a good thing. I think if GPT-4 is made cheaply available as previous models, it will be flooding the internet with generated information. And some of that will be good information. Some of them will be great information. Some of them will be deceiving information. But nevertheless, it makes it very difficult for people to create content. And it makes it very difficult for people to report on news and make commentaries. Well, that is, I guess, the way the world is going. I read on Zero Hedge that Microsoft, for example, is actually cutting its AI ethics team. Well, I guess they think that there is going to be some conflict of interest, and I think they are actually doing the right thing in this case, because instead of lying to yourself, perhaps it is more honest to cut the ethics team. Anyway, that's it for today. Check out drjlt.com. Thanks. Have a great day.